Welcome to the ARMR Report. Everybody, thanks for joining me. It's a Saturday, the 23rd, Memorial Day weekend. We're all going to have lots of fun this weekend right after we start it with this. Let's have some fun right now, all right? This is the ARMR Report. It stands for Algorithmic Risk Management Research. We call it quantamental investing. It's taking quantitative execution, combining it with a fundamental foundation. That's the information edge I share with you every time I come on this show, and I appreciate you joining me. We're going to get to the Cannabis Couch today, something we have been having to avoid for quite some time. We're going to get on it today. It's going to be fun. We're also going to cover the gold and silver story. It keeps progressing, so we're going to go into what's happening now and what we think is going to happen next week and as it rolls on. And of course, as always, I'll get to Q&A on a Saturday and we'll go through a lightning round session and I'll try to get to as many questions as I can. All right, a couple of ground rules, right? All the information I'm going to share with you is information I use in my own portfolio of how I manage my own personal capital, as well as capital I manage for investors through our Interactive Brokers affiliation. You guys can always subscribe to this channel down here. Give me a thumbs up if you like this. Also, we have a website for you. You can see that right there. Okay, it's the ARMRreport.com, ARMRreport.com. All right, check it out when you want to. It's an opportunity for you to go deeper into these discussions. There's also a free ARMR Report action alert you can sign up for, and so check that out. Now, let's get to the first topic of the day. I put a picture up there for you when this first started. It's the mechanical bull. That's what I call this stock market. This is a mechanical bull. I'm going to get to that in a minute. I'm going to explain it. But in order to understand where we are right now, and understand quantamental investing. I say that every time this show starts, but what does it mean? Let's just go through a quick progression. We use quantitative algorithms to help protect capital. So on the 24th of February, the ARMR Report went to cash, right? By the end of the first week of the stock market crash, we were in cash. And then on the 23rd of March, when the Fed started buying everything in sight, we started putting money to work. The first step was precious metals. They have outperformed every other sector. And then in April, we begin to broaden out the portfolio. Now, how do we do that? We have a whiteboard. We call it the ARMR whiteboard. ARMR insiders can find this, the ARMRreport.com. You can log in, you can see it. We update it constantly with new investing ideas we're doing research on, right? It's like the minor leagues, and we're looking to lift them up to the major leagues and put them in a portfolio when the quantitative execution algorithm tells us it's time to do that. And that's how we've been building our portfolio. So what's going to happen now? We're in a mechanical bull market. What's it mean? Everything they've taught you, either they have taught you or they're teaching you right now at university about stock market and why it goes up is completely wrong. Okay? Completely wrong. Earnings and valuations and economies have nothing to do with why the stock market goes up and down in the world we live in today. It may get back to that at some point, but that's not the case right now. And so if you're still using old school thoughts of why the market goes up and down, this mechanical bull is going to throw you right off. And who are the mechanics? It's the Fed, the US Fed, and all other central banks, and governments around the world who are creating unlimited supply of fiat currency. Quantitative easing packages to infinity, stimulus packages in the trillions, and it seems like there's a new one every couple of weeks. Where do you think they get this money? It's made out of thin air. This is why precious metals have outperformed every other index. This is a mechanical bull market. A quick progression. We started out with quantitative easing in March of 2009 with Ben Bernanke. We had a financial crash and we started quantitative easing. At the time, pundits told you this is not going to work. Well, QE won't work. It won't save the market. We have a financial destruction. Go take money out of the bank. Put it in a mason jar. Okay? Those gurus were wrong, as they usually are, right? And the stock market went up for 15 months in a row with nothing more than an 8% pullback. It happened twice over 15 months during the first round of QE. Then when QE ended, we had an 18% correction in the market, fast, vicious correction, and Operation Twist started. You guys remember that? Okay, maybe not. But I live and breathe this stuff, okay? So that's what the next step was. And every time there was a new QE program, the market went higher. The market would front run what the Fed was doing. So the market would go higher and then start to sell off and sell off hard when the QE program was over. QE twist, QE2, QE3. Until Bernanke finally figured out, I can't tell him how much QE I'm going to do. I'm just going to say QE until it's done, no longer necessary. Right? This is what the amount of bull market we have. Now fast forward to today. We're trying to figure out where the market's going from here. That's why I'm having this conversation with you. There's more QE than at any time in history happening right now. From 2009 till May of 2010, a 15-month period, the market went up without so much as an 8% correction. Now there's more QE than at any time in history, and this is only month 2. Now, I don't know where the market's going. Okay, I don't know. But I'll tell you one thing. The billionaires that you've been listening to on CNBC are wrong. They're done. They're out of this game. They're never going to be right. The Cubans, the Druckmillers, the Buffetts, okay? The Gunlocks, they're wrong. They've been telling you for 2 months the market has to go down and take out the lows. Even if that happens at this point, they've missed an unreal opportunity to make money. At the ARMR Report, and insiders can attest to this, we've seen something between 2 and 3 years worth of returns in 2 months. If you executed correctly and you put capital to work when it was necessary, your net worth is increased at a factor that quite frankly, you probably would have thought would take 2 or 3 years to see. It's happened in 2 months. So this is what I have to say to you now. Here's my prediction of what's going to happen next. You ready? Wait for it. I don't know. All we have to do is execute now. All we have to do is execute. Which means we have stop loss rules that we follow religiously here. We have principal protection stops, raised stops, trailed stops. Go look it up. I've already done a couple videos about this. You can find it under the channel, the playlists. You'll find it under ARMR Education. So now we're into the trailed stop part of this progression, and this is the fun part. We already have huge gains. So what we do now is we trail stop up. We book some profits at targets. We trade around the core. We're holding a core as long as we can. I don't tell you which positions are going to be long-term or not. I don't know. The market will tell me. Some positions might make it a year or more in my portfolio. Others won't. We have trailed stops that are dynamic trails. Okay, and I'll explain that on a future video because you can't just put in a set percentage on every position and hope that works. That won't work. You need a better plan. So we have trailed stops, ARMR insiders. You got to check the spreadsheets I put up for you under the ARMR portfolio part of the ARMR report. I update those stops all the time so you could see what the trailed stop is, what the moving averages we're using. And then, of course, ARMR insiders in the Slack room all day long, real time, live. I let you know if there's a stock that we own that's in jeopardy of taking out a stop. And then, of course, when it happens, I post again so you know that we're lifting that portfolio out of that position out of our portfolio. So all we have to do is execute now. The billionaires are out. You don't have to listen to them. The Chicken Littles have missed it. Now, look, the sky's falling, the sky's falling. Is it possible that there's an exogenous event where the market gaps down 20% overnight? Wipes out all the hard work? Of course it is. Of course it is. That's not a billionaire prediction. That's just a fact of life. If you can't handle that kind of risk, you should not be investing, right? Go back to the mason jar, bury it in the backyard. I don't know what's going to happen over the weekend. I don't know what's going to happen next week. Nobody does. That's not an investment philosophy. Oh, something big might happen overnight that'll ruin this. That's not an investing approach, because that's true in any environment. You could do things to mitigate that risk. You can own put options, which is basically insurance on your portfolio. And let's be honest, if you've had a move as large as the move we're looking at the ARMR report, it might make sense to take a small percentage to defend your portfolio through put options. Great. There's ways to do that, right? Any ARMR insider who wants to talk to me one-on-one, you have that right. Give me a call and I'll walk you through how I'm structuring my own personal portfolio to do that. Take out a little insurance, fine. But all we have to do is execute now. This is my last thought about executing. I'm going to move on to precious metals, and we'll finish up on Cannabis Couch. This is very important. A lot of ARMR insiders are asking me these questions throughout the day on the Slack room, and I want to address it right now for everybody. I wanted to share it with all of you, not just insiders. The way to execute correctly, when I say execute right, one thing I want to discuss is that you have to commit your capital at the right entry point, and you commit all of the capital you want for that investment at the correct entry point. You do not chase it as it goes up. I know people like to say pyramid your gains. I think that's the worst idea in the world. No offense, and I'm sure some guys can do it great and they make a lot of money, and I'm happy for you. Don't let me get in your way. But for those of you who are learning, this is a hard thing to learn. I get it. But over time, you'll get more comfortable. When we add a position to the ARMR portfolio, that's the day to take the biggest position size. It's not to take a little, see how it does, and as it starts to go up, start adding to it. Here's the reason. What we're trying to do is get on the right side of probabilities and statistics and only put capital to work when the reward is worth the risk. That's what we're doing. Now, the algorithms help us with probabilities and statistics. But in order to put the money right where the reward's worth the risk, we have to buy the position as close to the stop as possible. The stop is our risk. Our principal protection stop is the risk. Don't worry about losing money. You put a position on, you lose money right away. Great. Thank you very much, market, for showing me this was the wrong idea. And I'll raise the position out of my portfolio and look for the next idea. You want to take your position, and I mean the biggest position size, whatever it is. Maybe you put 5% into every stock. Maybe you put 10%. I don't know. Maybe it's 2.5%. Whatever the position size is, that's your average position size. That's what you put on at the start of the position closest to the stop. What you're going to find is the positions that act the best and make you the most amount of money never challenge the stop. You buy it right and it takes off. Okay? So please, do not chase things. That is not the ARMR investing way. We use algorithms to tell us when the right entry point is. That's the optimal percentage probability closest to the stop. That's when you put the position on. And you immediately recognize when it's not working and you lift it out. Your gains stay small, your losses stay small, and your gains are big. And that's how you increase net worth over time. All right, let's move on. Oh, let's don't move on. One more thought. It's okay if you miss something, right? I'm adding stuff to the portfolio in a bull market like this. You know, names are coming out constantly. It's okay if you miss one. I like to think of investing as surfing. If you're out on the ocean and you're getting ready for a set to come in and you paddle and you miss a big wave, do you keep paddling trying to catch up to it? I mean, of course you don't. You couldn't possibly catch up to it. And all that does is put you in the wrong position, so then the next wave crashes on your head and now you're sucking on foam, okay? So what you do is, you missed that one, you get right back into the position to catch the next set. That's what investing is. It's not about chasing things. It's about being in the right position to catch the right wave. That's what I'm trying to do for you, the ARMR Report. All right, let's move on to gold and silver real quick. I know you want to get to the Cannabis Couch, so I'm going to just make this quick on gold and silver. We've had a huge run off of the March 23rd buy point when we started putting stocks in the portfolio. Let's take a look at, just real quick, that's Splunk. We'll get to that in a minute, but let's look at, Newmont. We're in here on Newmont, right around the 200-day moving average. Right? In the 40s, the stock has run almost up to the 70s. Okay, and I can show you a series of chart patterns like that. You guys have seen it if you've been watching this show. Okay? What we had this week was classic selling a little bit into options expiration. Okay? We're not going to have a London fix on Monday. There's a holiday here in the US and in the UK. So you get some selling into that, which happened Thursday and a little bit Friday. Maybe you get some selling on Tuesday. That's the day of Comex Options Expiration. But honestly, the number we're looking at right now, if you remember last month, we were trading above 1700, and I said to you, OPEX, the ideal point based on OPEX is under 1700. I actually said 1696, I think was what I said. And that's exactly where it went down to on the day of OPEX, which was crazy. It came right down, but it's not crazy. It happens every single month. Well, I'll tell you this time around, it's 1750 on gold that seems to be the optimal point. So anything below 1750, the insiders clean up. So we're already below 1750. So I don't see a big decline here because there's no air pocket between where the insiders make money and where the price is. And the price is actually higher. So the insiders are already happy where it's trading. So, there's nothing else to think about for Tuesday. We'll just have to see, how precious metals behave. Big picture, I've already discussed with you ad nauseum here, and particularly today, about the QE programs that are going on, biggest in history. So this is a long unfolding bull market in gold and silver. We're seeing, and so it hasn't even, this is just month 2. So to say that it's topped here is crazy. It's just month 2 of massive currency creation. We also have, because of the Wuhan virus, for those of you who are new, supply has collapsed, right? Mines are closed, mints are closed, okay? So you have this serious imbalance, massive demand, supply has collapsed, and we're seeing some strange things in the silver market. The silver ETF, SLV, has seen 1,338 tons of inflows since the 24th of April. It's like massive inflows of what's going on. And really what happened recently, just this week, the kind of inflows that are happening in just the last week can only be action from JP Morgan. JP Morgan has a huge silver hoard, and I'm not going to bend your ear too long about this, but a lot is going on in the silver market that would suggest dramatically higher prices. Let's put it that way. And the bullion banks and the biggest, JP Morgan, who was last year indicted, right, by the New York AG for criminal manipulation of the silver market, which was short for like a decade. Now the biggest guy in the game is, long in his own account. So what does that tell you? Okay. There's a big discount between future and spot right now, about 50 cents in the silver market, and it should resolve itself higher. That's what we're expecting. And as silver moves up, it kind of drags gold with it. So sometimes gold drags, sometimes silver drags. So the bullish picture on silver is pretty serious. Okay. Also, something else I noticed last week or so, silver and the S&P were, so SI and ES, the futures contracts, were very much in sync for a long period of time. So if the S&P went down, silver would go with it. And we've seen a positive divergence from that in the last week and a half. So during this short squeeze that began, and I told you guys about this 2 weeks ago, that the short squeeze was coming, and here it is on silver, and it's rolling along, and we continue to see down days in ES and up days in SI, which is something we didn't see for a long time, proving to you and to me that there's a shift going on from investor sentiment when it comes to silver and what's happening there. So it's not just tied to those stupid algos that jerked it up and down based on ES. All right, let's get to the Cannabis Couch. Let me just remind you guys again, before we start talking about individual stocks, I'm not telling you what stocks to buy, okay? A lot of these stocks we already own in our portfolio, and I just shared with you how to execute correctly. You buy them when we add them to the portfolio. You don't buy them because we talk about it on YouTube and they're already up, okay? We might find a secondary entry point where we'll add to a position. And if you're an ARMR insider, guys, I'll tell you, hey, here's a shot. We bought Newmont cheap. It's up huge, but now there's a secondary entry point and you can add to it if you want. Okay? But for this conversation, you guys make your own decisions on what you buy and sell. Don't just take because I'm talking about it, run out and do it. Okay? Now, let's get to the Cannabis Couch. I want to share with you a couple pieces of news. Okay, let's start with this. Found this very interesting over the weekend, okay? Canadian study finds that enzymes in cannabis can treat COVID-19. Okay? Did you guys see that story? What I find really interesting about this, if it relates to our portfolio, we're making a lot of money in the last 2 months investing in stocks and in groups that benefit from what the Wuhan virus has done. So we find business models that were already doing well. Let's take cloud computing companies, okay, or companies that are allow for work from home, right? They were already doing well because there was already a move towards those businesses, and yet the Wuhan virus has accelerated the business model that what would have taken 2 or 3 years of work for these companies to collect their users, let's say, all of a sudden they've collected those users in 2 months. This is why we've seen stock performance that's out of control. We're seeing 2 or 3 years worth of stock performance in 2 months. It's because business models that analysts thought would take 2 or 3 years for the company to get to that level is happening in 2 months. So now let's look at the cannabis story. If it's possible that cannabis can help prevent anybody from getting the Wuhan virus, it's just accelerating business. And that goes along with what we've seen for the last month or so, where cannabis has become an essential part of the economy, both here in the US and in Canada. It's essential. So the perceptions are changing. Then you have massive deficits, particularly in this country, all around the world, but I'm just talking about the US now, massive deficits because of $1 trillion plans of bailouts And how do you fill that coffer up again? You do it with taxes. So now we're starting to hear rumblings that why don't we legalize here in the US and start collecting? Right? All the states are already doing it. 33 states or something. Now we have an onerous tax burden. So there's already taxes that are happening. But I'm saying let's legalize this thing and bring the whole economy up with the jobs that'll be created if there's no federal restriction. Okay? So the Wuhan virus has showed people how important cannabis is. And if we get lucky enough to find out that CBD, so these are like 8 strains of sativa that have high levels of CBD, and apparently it really it reduced the amount of infection rate by 70 to 80%, which is enormous. They're thinking of making a mouthwash with cannabis. You gargle it and it stops, it blocks the receptors in your mouth and your nose from getting the Wuhan virus. That's like a dream, okay? That's a dream to us. That's not why these stocks are up, but it was a fun story. Here's a better reason why these stocks are up. Check this out. Had an ARMR insider put this into the Slack room this week. These are the numbers. Cannabis stores, unadjusted, in dollars. Look at the numbers in March. All of Canada. You're seeing 20% increases from February to March. Okay? Look at what's happening in Ontario. 39 million to 47 million. You're seeing big increases month over month. So we're starting to see, and let's get back to the original cannabis fundamental story. For 12 months, because they peaked last year in May, right? So for 12 months, we've been in a bear market for cannabis. It's been ugly, and I've done my best to keep you out of it, right? I've been out there saying to you for months, I love these ideas. We can't own them right now. They're in the teeth of a bear market, right? And we constantly do research. We listen to conference calls. We talk to management teams. We find out there's way too much supply. The demand's not there. Ontario's not opening, yada, yada, yada. All these things make it terrible. Now we're seeing a couple of things change fundamentally. Demand is surging, as we can see by those numbers I just showed you. Some companies are going out of business. Supply is coming in line with demand. And so the guys who are left standing, who've got the biggest war chest of cash, can take advantage of the correct supply-demand equation that's now starting to come into line. And that's why these stories are getting interesting again here. And we use our algorithms and our chart patterns to tell us when to put money to work. Let's take a look at a couple of names. What I want to share with you right there is a chart pattern of AbbVie. And you're saying, why are you showing me ABBV? Okay, because what I want to show you, I've spoken to you guys a lot about relative strength breakouts, right? Let's take a quick walk down memory lane for a second. Okay, before we get there, let's do this so you can see what I mean. Okay, when we look at relative strength breakouts, last week, you guys remember at the beginning of the week, I sold everybody who receives an free ARMR Action Alerts email 2 Fridays ago. I sent you an email, and the highlighted chart, the bonus chart of the week, was Spotify. It was right here, okay, where my arrow is. That was the day we were buying Spotify. And what we said was, look at the relative strength, which is this blue line here. It broke out above these past highs here and here ahead of the price. And that's one of the best ways to find a stock to buy. It's a great trigger. Relative strength leads price. And you can see what happened to Spotify. It exploded last week. Is it possible it exploded because of the Jeff Rogan experience and that big announcement? Sure, that added to it. It was already breaking out. But I got another thing that could have been the reason it exploded higher. Maybe you haven't heard this. But the ARMR Report is now on Spotify. It's a podcast. You guys can find it on Spotify now. That's the big breaking news. All right, look, the relative strength line blew out. Let's look at one more name, okay? In the ARMR portfolios is Splunk, okay? Same story. Here's the relative strength breakout right in here. Now, we bought the stock right here. That was the day we were buying the stock. We added it to all of our ARMR portfolios. All ARMR insiders know it. The company announced earnings on Friday. The stock blew out to new highs. But the relative strength had already broken out to new highs, leading the way. Now let's look at Canopy Growth. Okay, the relative strength is showing us nothing on Canopy Growth. It's not going to help us. How about Cronos? God awful. Absolutely terrible. Right? How about GW Pharmaceutical? Well, a little bit better, but not really showing it. But it could be. You could argue that's helping us out right here. See, this high is 132. The relative strength is right here. And now the relative strength is broken out above the high at 132, but the stock is not above 132 yet, right? So we were in there adding this position as it broke back above its 200-day moving average. And you could say that this stock actually is outperforming all of the other names, the other big names, from the standpoint of relative strength now. See, the relative strength is a 71. All these other relative strengths are in the 60s. So with the exception of GW Pharmaceutical, you can't really use relative strength to help you. All right? So what we're using now to help us identify chart patterns that work, let me show you this. What we call this is the Fibonacci Speed Resistance Fan. It's our favorite way to identify when a downtrend is over and the turnaround has begun. And so I share with you AbbVie from last year. If you guys might remember this from last year when we were doing this. Okay? AbbVie broke out right here. When it breaks the third downtrend line, it tells you the downtrend is over. Stock, we paid less than $70 a share for the stock, and it ran all the way up, into the 90s in a very short period of time. Okay? Forget about this breakdown. That's the stock market crash. Okay? Now let's look at CGC. Okay? Same pattern. Same pattern. Breaking 3 downtrend lines. This is why we were buying the stock and adding it to ARMR portfolios on the 15th. Okay, we added it on the 15th. Don't forget, I'm not telling you to run out and buy it tomorrow or Tuesday. The time to add it was when it broke this downtrend and closed back above the 50-day moving average. Now it's running up into the 200-day, which is right here, this black line, around $21 a share. And the company's going to announce earnings next week. I think it's Thursday morning. So that's going to be a big week for, a big day for Canopy and a big day for all the cannabis stocks. If the reaction to the news is positive, it'll propel this breakout. Obviously, if it's negative, it'll stop the breakout in its tracks. So we'll just have to wait and see. Here's a chart of Cronos. Now, those of you who know me know I don't like the Cronos management team, and it's kept me out of the stock for a while. Okay? But I can't ignore the fact that you have a perfect double bottom right on long-term support. This company has a cash hoard and a connection to Altria. So I'm going to own the stock even though I have to hold my nose over management because of that setup. All right, and then of course, GW Pharmaceutical rounds out the top 3 names. Oops, GWPH. Okay, now I've drawn this downtrend for you, but really the relative strength line is helping us on this idea. But still, as it breaks above that third downtrend line, it tells you this trend is over. Okay? And let me just share a thought here on GW before I get to your questions, and I'll wrap it up and get to questions. The reason I like GW is that I really think GW is a biotech stock. It's not a cannabis stock. I know they use CBD, they use extracts to create drugs. It's a drug company. That's what it is. It's a biotech stock. But it's unduly suffered because it's part of every cannabis ETF. And so for 12 months, the stock has been sat on, even though they've had good earnings numbers, even though they've had good developments inside of their biotech discovery platform. Stock has been held down because it's part of all the ETFs, and they've been collapsing. So I submit to you that if the ETFs of cannabis start to go up or stabilize and are no longer, in a free fall, this stock might disproportionately benefit. So those are my 3 ideas for the day in cannabis. Okay, there's others that we own, but those are just 3 I'm going to share with you. And I'm ready to open it up to questions, guys. Thanks for spending your time with me. Let's get to it. I'm going to run up here and look at let's see. Just going to go to the top, start answering questions. All right. Tech Monkey. Looking forward to Cannabis Couch. Great. All right. Hi, guys. How are you? All right. Charlotte's Web. Tom Brady. Charlotte's Web. Charlotte's Web, okay, I'm starting to get some questions about that. The stock was up 25% yesterday, right into the close. It's been really a terrible performer. The last couple quarters have been a real disappointment to me. I wonder if this is going to pull up here. Wanted to show you the chart pattern. Let me see if this works. No, not on this software. All right. Well, I don't know. Oh wait. I got it here. Sorry. Just give me a second, guys. Yeah, here it is. Take a look. Okay, see, so what you've got here is a move that just came off the bottom. It's just a serious downtrend, right? So it's possible the stock is going to get going, particularly if they discover that CBD helps, cure people or prevent you from getting the Wuhan virus. So it's possible that the stock starts to go up, but the fundamentals of the last couple of quarters have been a disappointment. And the fact that the FDA hasn't ruled on consumption of CBD and products they've gone well past the time where they were supposed to say something. They were supposed to say it in March, but then we had the Wuhan virus, so everything's been thrown out the window. So the company's doing okay. They're going to keep trugging along, but not my favorite idea right now. But I'll do some work on it, Tom, and I'll let you know. I mean, welcome to the ARMR Insiders. I'm glad you decided to join up. So we could talk about it one-on-one. I'll give you a call. I'll do some work next week and call you up and let you know what I think. Charlotte's Web it's not on the New York Stock Exchange though. Okay, it's a CWBHF is the symbol. It's on the OTC bulletin board, or it trades on the Toronto Stock Exchange. So I do like that. It's not the CSE. It's actually a Toronto Stock Exchange. You can buy it Canadian if you want. Michael D. Good morning, Brett. Do you have suggestions on how to invest in technology in the future? 5G, internet, artificial. Yeah, I do. Okay, good question. Here are my favorite technologies that I'm investing in right now. These are the companies I'm investigating that are going up onto the whiteboard. I like 5G plays, of course. I love cloud plays. They're my favorite. I'm looking for companies that have a niche business in the cloud, a moat around the business. Cloud comes with high margins, right? So one of our favorite investments that we've owned for a while is Viva Systems. So it's VEEV. I'll show you the chart pattern. And this is an example of what we're looking for. Okay? This develops cloud-based software and in the life sciences industry. And again, this is a relative strength breakout that really led the stock. You can see right back here, the relative strength broke to a new high well before the stock did. Okay? And then we had an ARMR insider bring up this idea in our Slack chat room this week, and he's dead on correct. Develops cloud-based software, automate and control accounting practices. same situation. I just didn't see the stock. If I had seen this stock earlier, I would have been all over it. And so now I have to wait for some type of a handle to form on this cup that will allow me to buy the stock, because I love this story. So not buying the stock, don't own it. I'm not telling you to run out and buy it. I'm just showing you an example of the names that interest me. So technologies that interest me are cloud-based businesses that dominate a niche, so they have a moat around their business, and it's high margin. I like 5G plays. One thing that concerns me is the component part of the story. If we've got friction with China, if we've got problems with manufacturers and sourcing supply, I don't like equipment companies. I like businesses that are high margin, where I'm not going to have to worry about those things. So investing is about opportunity cost of money, right? I can buy the equipment guys. My favorite in the 5G space is Ciena, and CIEN, and I keep getting stopped out of it. I'm not trading it right, and one reason is I don't like lower margin businesses that depend on sourcing supply from overseas when I really don't know where the supply is going to come from, right? If things get worse. So I'd rather focus my time investing in companies in the cloud that don't have anything to do with the supply chain. That's my opinion. I think AI is great. Quite frankly, I keep monitoring IBM, because I think eventually the AI part of their business is going to really help them out. The stock is dramatically underperforming, and we don't own it. But some of those other things, artificial intelligence, AI, these things, I don't see a real business model like cloud computing or those types of things to drive businesses today. So those are my thoughts there. Like robotics and whatnot. I love those ideas, but I think they're further out in the future. They're not for investing right now. They might be on my secondary whiteboard. Names to watch. The Internet of Things. Memory chips to serve these products. Yeah, you could buy the chip companies. You certainly can, right? I mean, AMD, Intel, NVIDIA, these things. I'm just not a chip guy. I've done it in the past, and I've made money in the past. They go through up and down cycles. They're very cyclical, right? And right now there's sourcing issues. Perhaps, maybe not. But I've missed out, right? I've totally missed out on NVIDIA, right? I can't dance with all of them. So I just got to find the ones I like the most. And I try to center on businesses that have high margins and a real serious moat that makes it hard for people to compete. So a chip company can dominate for a while, and then another chip company leapfrogs them, and I might not know that, and then the company starts to suffer. And I might be late discovering that. That's why I haven't really been focused on that space. And I've missed an opportunity. So if you're happy there, have at it. All right. Okay. Are the QQQ and SMH enough to capture this move, or do you have other suggestions? You're talking about ETFs now for these types of investments. I would just say this to save time right now. Go to ETF.com. ETF.com. You can figure this out yourself. And you can put in SMH and see what all the similar types of ETFs are and read about them, right? You could put in, there's cloud ETFs, there's software ETFs. And that's one way to go about it. If you don't want to do the work and identify individual names and you want less risk, but still capture some of the upside, then you could build a portfolio of ETFs. I like cybersecurity. There's an idea, right? So the ETF HACK, HACK. I'm not buying that. I'm finding names inside HACK that I think will outperform, and those are the ones I want to own. But I think cybersecurity is important. In fact, Splunk, is one of my favorite names. I talked about it a minute ago that had a huge earnings. Interesting. The headline of the earnings announcement looked like a disappointment. So the stock goes down in the aftermarket. Oh, they missed the number. And then, of course, the stock is up. I think it was, 12% or something the next day. Had a huge run. When the market opened the next day, every analyst upgraded it. Jefferies says it's a must-own stock. So sometimes I know individuals have a hard time understanding. They read the headline, it looks like a bad number, and the stock's up huge. So let me just tell you, you've got to listen to the conference call, or you have to wait at least if you don't want to listen. Don't react in the aftermarket. You have to listen to how or see how analysts view the conference call, because that's all that matters. And I'm telling you, when I was on that call, oh God, Splunk is a juggernaut. And they have a serious cybersecurity part of their business that is benefiting from the Wuhan virus, because there's been something like a 600% increase in cyber attacks over the last couple of months. And so this makes me think about what other cybersecurity companies will benefit from that, in those intrusions that demand their attention and propel their business. So those are my thoughts there. All right. Do you think Tesla's overvalued? Michael D. I've never been a Tesla fan, and it's impossible for me to figure out why that stock trades where it does. So I'm going to avoid that answer. I have no idea if it's overvalued or undervalued. And quite frankly, valuation's got nothing to do with why that stock goes up and down. Nothing. It's liquidity in the market and animal spirits and excitement over a product. It's not anything to do with real fundamentals. Okay. Mr. Kreisberg, you're so right, Brett. Thank you very much about making money the last 2 months. Thanks for the experience. Oh, good. I'm glad you're doing well. Excellent. Glad I've helped you out there. Brad, are you looking towards? I don't get what that means. Am I going to QB the Bucks without Big Bill? I don't know. I'm not with you on that. Is it too late to get into Charlotte's Web, Michael D? I don't think so. I think it was a huge up day, and it'll probably come back down and give you a shot, is my guess. Once it's federally legal in the U.S. All right, let's keep going. Silver. All right. Okay. YG stock. Okay. Do you worry about Trump's potential cancellation action of the free trade zone, Hong Kong, the influence on stock markets? Okay, that's a good question. Yuan stock, that's a good question. There's a lot of things for me to worry about. You've heard the term, the market climbs a wall of worry. You could put that on the list of the wall of things that I worry about. It doesn't affect how I run money. It doesn't make me reduce my exposure at all. But it's out there. Got to use stops, got to use trailed stops. There's so much bluster, it's hard to ever pick out one reason for one thing or another. All right. Nick, any thoughts on delisting Chinese stocks from the U.S., how it's going to affect? I don't know how it's going to affect, and it does bother me. It's another thing on the list of the wall of worry. What are the ripple effects? I don't know. A lot of those stocks are in ETFs. What does it do to those ETFs? I don't know. But we can't guess what's going to happen next on all of these things. They just go on a list of things that bother us. And fake gurus will then go back when the market goes down and say, see, I told you this was a problem, but that's not why the market went down. The market went down for other reasons, but they point to these reasons. But these aren't reasons to manage money. They don't help us manage money. If something gets too far above a major moving average, we book some profits, we use the trailed stop to protect us, and eventually we'll get stopped out of all these positions, book our gains, and we'll discover why afterwards. Okay, would PSLV still be a good buy at current prices to hold long? Look, Tech Monkey, we're already long this thing a lot cheaper, so I feel like I've answered that question. I don't ever suggest running out there and buying an idea that are in ARMR portfolios at dramatically lower prices. I've been sharing for a while what we think's coming here in silver, but and so we've got the pop. It's going to be very volatile. I don't know what's going to happen next week. It could easily sell off and close the gap, and then you'll get a better shot at a price closer to a reasonable stop. At the same time, it could just blow out next week. I don't know. I can't help there. Anyone talked about VFF yet? Is that the Village Farms? I haven't. You know, it's got the same type of, you know, chart pattern as Charlotte's Web. You know, they all just blew out the bottom. You know, they came off the bottom. So my guess is this, guys. I'm buying the lead stocks, the top tier names with the most amount of cash and the best balance sheets where institutions are going to put capital. And as we make money there, we'll have a secondary opportunity to buy some of the smaller names. That's how I'm going to play it. Okay, so if those big names fail, there's liquidity there. I can get out. Maybe I'll book a profit. Maybe I'll take a loss. But at least I got the liquidity to move, and I won't get stuck. So what I want to see is a blowout in the big names. The small names will go with it. Then we'll have a correction, small pullback, it's consolidation, and we can broaden out the portfolio into the secondary names once the bull market's underway. We're just breaking the downtrend right now. There's a lot of overhead supply above us.
I can't wait.
Son, let me just finish up here. I'm almost done.
What?
So excuse us.
Wait.
Son, honestly, I'm working right now. All right?
I can't wait to show you how.
I can't wait for you to show me. You want to say hello? You want to say hello to everybody?
Yes.
Everybody, this is my son. My son.
Hi.
There you go. All right, I'll be out in a minute,
Okay.
all right?
You're about to do your show?
It's already on. I'm almost done. All right?
Oh, yeah. I was in it.
All right. Thanks for indulging. Okay. How about put all the money in cannabis stocks and investments to get the biggest return in this chance? I mean, that's up to you, man, how you want to run your portfolio. I like to diversify a little bit more than all in one group. All right. Paul Hancock, what do I think about Hexo? Not my favorite name. You know, Hexo's, again, I'm staying with, I'm going to try to, there's a lot of questions. Let me just rip through them. I'm staying with the top tier names is where I'm going to go first. Let's see. Any more questions here that I can answer? I don't, Tech Monkey, I don't have prices that I think stocks can go to. You're asking me about GW Pharmaceutical. I don't have a fair price there. I let the stock show me when it's done going up by using trailed stops to book profits. So stocks generally go way past what you and I think are fair values. When you get into the throes of a bull market, fair values you can throw out the window. It'll just cap your upside. We have to ride our winners as long as possible. We have to cut our losses quickly. So the worst way to do this is to try to figure out, like, what's the value of this stock and then just go sell it because it hits that price. You could do that with a portion of your portfolio or of a position, book a small profit and carry the core. Insider selling of Illumina. Do you see a reason behind that? I don't really care about insider selling. Insiders sell for all kinds of reasons. I've never in my 30 years found a way to look at those numbers and have it help me, unless it was some kind of massive selling. Okay, but insider buying matters to me. There's only one reason an insider buys his own stock. He thinks he's going to make money on it. Okay. We don't know why insiders sell. They could get a divorce and they have to split their assets and they're selling. I mean, it means nothing to me. Any thoughts on Fastly? I love Fastly. I made some money trading that stock. They just did a secondary and the stock went straight up after it. I just can't find an entry point right now because it's skyrocketing. That's definitely on our whiteboard. I don't know the ARC ETFs, so I can't answer that question. Ravi, any contrarian view on cruise lines stocks coming back? You know, look, if you're looking, to me, there's a group of stocks that have been destroyed by the Wuhan virus that could come back. You've got the cruise lines, you've got the airlines, you've got the energy stocks, you've got cannabis stocks. So now it's a question of opportunity cost of money. What would I rather own? I'd rather own the cannabis stocks. I'd rather own energy stocks before I'd ever get to cruise lines. And in all fairness, that's been true for 30 years. I've never bought the cruise stocks. Never. I never bought the airlines. Those just aren't stocks I have an interest in. I'm looking for high margins, high barriers to entry. Those are the businesses I want. I love the margins that are going to come through on cannabis when this thing gets rolling. So there's my thought there. What do you think about, okay, those two stocks, Tech Monkey, I got to look into those. No opinion on QMCO or ZVO. Is it possible, Brett, says Nick, a target for GW? Oh, for GrowWorks. Are you just holding to a trail stop? You just let the cat out of the bag, man. I don't share that stock with anybody on YouTube because it's a small cap name and I've been trying to avoid. I don't want to ever come across as a guy who's, on YouTube trying to promote a small cap name. So I don't talk about it. But now the cat's out of the bag. So now you all know. Let's take a look at Grow Generation, GRWG. If you didn't already know this, now you know. Okay? This is our favorite US MSO play. Instead of buying the US MSOs that trade on the Canadian Stock Exchange, what we've done is we've bought shares of Grow Generation, which is like the Home Depot for cannabis and hemp growers. It's a small company. They only have 29 stores so far, but they're rolling up all the way across the country. We love this story. Full disclosure, we added it. Okay, let me just show you a picture here. We added it to ARMR portfolios at $3.50 here. $3.50. So the stock is trading, at the end of the day, it was, the last trade was $6.66. Okay? So please understand, I'm not telling you to run out and buy the stock today. We bought that, as an ARMR insider, we bought that stock early April at $3.50. Okay? So your question now, Nick, is how am I going to trade it? You can trade around the core. It's had a huge run. It's gone back up to its all-time high. Feel free to book some profits whenever you want. It's never wrong to take some money off the table. I'll never say don't do that. If that makes you comfortable, go for it. But for my personal money, I think this is a huge stock. I'm not sure I own enough of it. Okay? And I can share more of that thought with you in the Slack room, or you can call me up one-on-one and we can chat about why I feel that way. And so what I'm looking to do is add on weakness, to be quite frank with you. And I'll trail stop out some. If it set up a pattern, if the market started to roll over, I might book some profits. But right now we're in the teeth of a bull market, and this stock is leading all the cannabis stocks. I mean, go find a U.S. cannabis company that's trading at a 24-month high. You won't find it. This stock is. There's a reason for it. So I'll say again, you want to cut your losses and you want to stay with your winners as long as possible. That's my thought there. SE, C Limited. No thoughts on that right now, Marion. Guys, look, if I can't get to all these questions, if I don't get to it, write in the comment portion. Just write me the questions. And what I could do is get to each question. I think we've been on a long time today, and I'm going to have to cut this off. I don't know how much time has it been, but it's been long. So let me just rip through a couple more, see if I see anything I can answer. And if I don't get to it, just comment, and I'll do some research, and I'll let you know what I think. For fun times, what do you think of SQ taking market share? Yeah, I like Square. I like Square. I like Square and I like PayPal. I just haven't gotten them. But they're on my list. I'd like to get them if I get shots. Why isn't Shopify on my list yet? SHOP. because I've completely and totally missed it. Yeah, I've said it. Totally missed it. Stock should have been on the list. I should have been buying the stock early April. Totally missed it. Have to wait for the next go round. It's my view on the market. I suggest you watch the beginning of this video and you'll get my view on the market. Buying Bitcoin by Drew, asking me why I buy Bitcoin. I'm not a Bitcoin player. I'd rather buy gold and silver. I want a liquid market that I can trade. I don't want my money ever tied up in something that goes illiquid and drops like a stone and I can't find my way out. That's my opinion there. Green Organic Dutchman, all those names are secondary to me. Okay. I don't have knowledge or opinion on MVIS, so just write me these comments because I'll forget. In the comments section, guys, anything I don't get to, write me a comment and I'll do some research and I'll answer it. Father-son moment. I'm glad you guys enjoyed. I'm glad this has helped you guys out. All right. We're almost at the end there, it looks like. All right, guys. We're going to wrap it up for today. Thanks so much for being here. Have a great Memorial Day weekend, and we'll go back at it again on Tuesday. I'll have a show Tuesday at 4:30. It'll be an ARMR education video. Take care, guys.